On April 2, 2025, President Trump sent shockwaves through the global economy with the announcement of sweeping new tariffs. These tariffs, he declared, were essential to protect American jobs and counter unfair trade practices. The move immediately triggered a wave of uncertainty and fear in financial markets worldwide. Stock markets plunged as investors grappled with the potential fallout of a full-blown trade war. The Dow Jones Industrial Average, a key indicator of U.S. market health, tumbled by 0.61%. The S&P 500, a broader measure of the U.S. stock market, experienced a sharper decline of 1.69%. Technology stocks, particularly sensitive to global trade disruptions, were hit hardest, with the Nasdaq Composite plummeting by 2.54%. The bloodbath wasn't confined to U.S. shores. Asian markets also opened sharply lower, reflecting the interconnected nature of the global economy. Japan's Nikkei 225 index plunged by 4%, while Australia's ASX 200 shed 2%. The sudden and dramatic market reaction underscored the profound anxiety surrounding Trump's aggressive protectionist policies. At the heart of Trump's new tariff regime lies a universal 10% tariff on all imports from all countries. This baseline tariff, effective April 5, 2025, represents a significant escalation in Trump's trade war tactics. It's designed to provide a blanket protection for American industries regardless of their specific competitive landscape. However, the 10% baseline is just the tip of the iceberg. Trump's plan also includes additional tariffs on specific countries deemed to be engaging in particularly harmful trade practices. China, a frequent target of Trump's ire, faces the brunt of these targeted tariffs. On top of the existing 20% tariffs imposed during previous rounds of the trade war, China now faces an additional 34% tariff on all goods entering the U.S. This brings the total tariff rate on Chinese imports to a staggering 54%, effectively acting as a major deterrent to trade between the world's two largest economies. Other countries haven't been spared either. Vietnam faces a 46% tariff, while Cambodia is hit with a 49% tariff. The European Union, a major trading partner with the U.S., faces a 20% tariff, further straining transatlantic relations. Japan, India, and the UK also face significant tariff hikes, ranging from 10% to 26%. These targeted tariffs reflect the Trump administration's belief that these countries are benefiting unfairly from their trade relationships with the U.S. While the macroeconomic implications of Trump's tariffs are significant, their impact on everyday consumers is equally profound. Starting May 2, 2025, the 54% tariff on Chinese goods will also apply to packages worth less than $800. This change effectively eliminates the de minimis threshold, which previously exempted low-value shipments from tariffs. This means that millions of American consumers who rely on online platforms to purchase affordable goods from China will now face significantly higher prices. From electronics and clothing to household goods and toys, a vast array of products sourced from China will become more expensive for American buyers. This direct hit on consumer wallets is likely to fuel inflationary pressures, eroding purchasing power, and potentially dampening consumer spending. The move is particularly concerning for small businesses that rely on imports from China to stock their shelves or source components for their products. These businesses, often operating on thin margins, may struggle to absorb the increased costs, potentially leading to higher prices for consumers, reduced profits, or even job losses. The elimination of the de minimis threshold underscores the far-reaching consequences of Trump's tariff policy, which extends well beyond large corporations and directly impacts the pocketbooks of ordinary Americans. Amidst the sweeping tariffs targeting a wide range of countries, Canada and Mexico find themselves uniquely positioned. Both countries, partners with the U.S. in the United States-Mexico-Canada Agreement, USMCA, are exempt from the new tariffs. This exemption reflects the Trump administration's desire to prioritize trade relationships within North America. The USMCA, which replaced the North American Free Trade Agreement, NAFTA, went into effect in 2020 after contentious negotiations. The agreement includes provisions aimed at reducing trade barriers and promoting investment between the three countries. By exempting Canada and Mexico from the new tariffs, the Trump administration seeks to bolster economic activity within the USMCA bloc. However, the exemption for Canada and Mexico doesn't entirely insulate them from the potential fallout of the tariffs. Both countries have deep economic ties with nations targeted by the tariffs, including China and the European Union. Disruptions to global supply chains and a potential slowdown in the global economy could have spillover effects on Canada and Mexico, despite their tariff-free access to the U.S. market. Section 5. Beyond tariffs, additional measures. Target foreign cars and more. Trump's assault on global trade extends beyond the imposition of sweeping tariffs. The president also announced a 25% tax on all foreign-made cars starting April 2, 2025. This move, long threatened by the Trump administration, is aimed at bolstering the American auto industry and reducing the trade deficit in the automotive sector. However, the tax is likely to result in higher prices for American consumers looking to purchase foreign cars, which often offer greater fuel efficiency or specialized features not readily available in American models. The tax could also harm American auto workers if foreign car manufacturers decide to scale back production in the U.S. or shift their manufacturing operations to other countries with lower tariffs. Furthermore, the Trump administration has signaled its intention to implement additional measures that could further disrupt global trade. These include the reinstatement of plans to end tax-free treatment for small packages from China and the potential imposition of future tariffs on specific items like copper and pharmaceuticals. These additional measures highlight the Trump administration's commitment to a protectionist trade agenda, even if it comes at the cost of higher prices for American consumers and potential retaliation from trading partners. Section 6. Market turmoil, stocks tumble as investors seek safe havens. The announcement of Trump's new tariffs triggered a wave of selling in global stock markets as investors reacted to the heightened uncertainty and the specter of a full-blown trade war. The Dow Jones Industrial Average, a key barometer of American corporate sentiment, tumbled by 0.61%, while the broader S&P 500 index shed 1.69%. Technology stocks, particularly vulnerable to global trade disruptions, were hit especially hard, with the tech-heavy Nasdaq Composite plummeting by 2.54%. The sell-off wasn't confined to U.S. shores. Asian markets also opened sharply lower, reflecting the interconnected nature of the global economy and the fear that Trump's protectionist policies could trigger a worldwide economic slowdown. Japan's Nikkei 225 index plunged by 4%, while Australia's ASX 200 fell by 2%. European markets followed suit, with major indices across the continent opening in the red. As investors fled risky assets like stocks, they piled into safe havens like government bonds and the Japanese yen. The yield on the 10-year U.S. Treasury note, a benchmark for global borrowing costs, fell sharply, indicating a flight to safety. The Japanese yen, traditionally seen as a safe haven currency during times of global uncertainty, strengthened against the US dollar. This flight to safety underscores the depth of investor anxiety surrounding the potential economic fallout of Trump's tariff policies. Section 7. Economic fallout from revenue gains to recession fears. The economic implications of Trump's new tariffs are complex and far-reaching, with the potential to both boost government revenue and disrupt global trade. The Congressional Budget Office estimates that the tariffs could raise an additional $2.2 trillion by 2034, providing the U.S. government with substantial resources to fund domestic programs or reduce the budget deficit. However, this revenue comes at a cost. Economists warn that the tariffs are likely to lead to higher prices for American consumers, as businesses pass on the increased costs of imported goods. This could fuel inflationary pressures, eroding purchasing power and potentially dampening consumer spending, a key driver of economic growth. Furthermore, the tariffs could disrupt global supply chains, forcing American businesses to find new, potentially more expensive sources for components and raw materials. This disruption could lead to higher production costs, reduced efficiency, and ultimately, slower economic growth. In a worst-case scenario, some economists fear that the tariffs could tip the global economy into a recession. The International Monetary Fund has warned that a full-blown trade war could shave as much as 0.5% off global GDP growth. While the Trump administration maintains that the tariffs are necessary to protect American jobs and counter unfair trade practices, the potential economic fallout is significant and cannot be ignored. Section 8. International backlash, retaliation and condemnation mount. The international community has responded to Trump's new tariffs with a mixture of condemnation and threats of retaliation, raising fears of a tit-for-tat trade war. The European Union, a major trading partner with the US, has vowed to retaliate with tariffs of its own on a range of American goods. China, the primary target of Trump's tariffs, has also pledged to take countermeasures, potentially targeting American agricultural products and other key exports. Even Canada and Mexico, exempt from the new tariffs due to the USMCA, have expressed their displeasure with Trump's protectionist policies. The widespread condemnation highlights the growing isolation of the US on the world stage, as Trump's go-it-alone approach to trade alienates allies and undermines the rules-based international trading system. Experts have also weighed in on the potential consequences of Trump's tariff strategy. Ken Rogoff, a former chief economist at the International Monetary Fund, described the move as a nuclear bomb on global trade, warning of the potential for a devastating economic fallout. Scott Bessent, a former hedge fund manager and Treasury Secretary, advised against retaliation, urging countries to instead focus on strengthening the World Trade Organization and other multilateral institutions. Section 9. A World on Edge. The uncertain future of global trade. The imposition of sweeping tariffs by the Trump administration marks a significant escalation in the global trade war and casts a long shadow over the future of the global economy. The tariffs threaten to disrupt global supply chains, raise prices for consumers, and dampen economic growth worldwide. While the Trump administration insists that the tariffs are necessary to protect American jobs and counter unfair trade practices, many economists warn that they could ultimately harm the U.S. economy by fueling inflation, reducing consumer spending, and undermining business investment. The international community has responded with a mixture of condemnation and threats of retaliation, raising fears of a tit-for-tat trade war that could further damage the global economy. As the trade war intensifies, businesses and consumers around the world are left to grapple with the uncertainty and volatility it creates. The stakes are high, and the outcome remains uncertain. Will the tariffs achieve their intended goals of protecting American jobs and reducing the trade deficit? Or will they ultimately harm the U.S. economy and undermine the global trading system? Only time will tell. One thing is certain: the global economy is entering uncharted territory, and the consequences of Trump's tariff tsunami will be felt for years to come.